this is JP Farah for StructuredTrading.com website. I'm going to show you, to comment you, a trade that we made last week. A trade where I go long on the E-mini SP contract, and then we hedge our position using the E-mini micro MNQ. First of all, I'll show you my screen and explain it. The green ones compare the ask and the bids in the last bars. It means that we are in presence of more aggressive asks than bids. And the opposite for the red arrows and bulbs. We can also see a cumulative delta on the fourth section of the chart. The fifth section shows the direction of the index E-mini SP contract and NASDAQ since the last settlement. The histogram is the difference between these two indices. We are observing after the last slide of the market some new activity in favor of the asks, with the green arrows and the green bulb. We try to buy the ES at 10.5, but as the asks pressure continues to put the price higher, we are ready to pay 12 to enter our E-mini SP leg. If we are executed at 12, then we will look for our hedge leg, which is MNQ. Our aim is to hedge part of our risk or all of it. To understand how much MNQ I need to hedge my position of one E-mini SP, we can go to our website structured-trading.com. There are two sections, simple calibration and calibration with implied volatility. To enter this last section, you need to register on the website. I personally use the calibration with implied volatility as it's more accurate and take into account the volatility of each index, and therefore this difference of volatility between the E-mini SP and the NASDAQ. And then we understand what is the perfect calibration that we need for one E-mini SP, which is equivalent to 10 micro E-mini SP. For one quantity of E-mini SP, we need to hedge half the quantity of MNQ. This means that for our example, we will need 5 MNQ for our one E-mini SP, which is equivalent to 10 micro E-mini SP. Our position after a slight moment in negative territory, the E-mini SP leg is producing a nice profit. With a confirmation with the cumulative delta that is increasing. I'm therefore going short on the MNQ contracts. The first hedge leg is at 49.5, the second at 53 on the MNQ. Those two legs are not far apart, and our aim is to have an execution on the hedge. Bang, execution on the first hedge leg, waiting for the execution on the C count and third leg further up. We observe that we have a profit on the MNQ. The S is retracing a little. The fact that we didn't have more execution on the MNQ pushes me to take profit on these two positives legs. My friends, I'm making a pause on this hedge trading video to ask you to register on my YouTube channel, to like, to share, to comment the video. I will answer to each comment personally. We're looking for an execution at 15.5 for the E-mini SP, my biggest leg. We see on the bottom right of the screen the open trade equity, the P&L of the current position, the ES P&L plus the MNQ P&L. We have a global P&L of $145 for the two legs. This is a good trade and we want to keep our profit. We have an execution on the both legs and we are flat now, with a nice profit generated in a few minutes. At structured-trading.com, we teach you how to trade an area between those two lines. We at Structured Trading, we have a full set of statistical studies to understand if we need to buy the spread or to sell the spread. At Structured Trading, we teach you how to manage your two legs position and therefore to trade less. happy trading and spread the word with structure-trading.com.